And the next point is reviewing rents. I guess I should be talking about the rents in Auckland. I can't speak for the whole country, but in Auckland has gone up by, on average, about between 11% to 16%, depending on different number of bedrooms in Auckland for the last 12 months. So temporarily, it's we are feeling the dip in the rental market temporarily because it's winter. At the time of this episode, it's June. So the market was really buoyant. Rental market was extremely buoyant from the end of 2022 all the way to April this year, 2024, for well over a year, and rents have gone crazy. Now we are looking at a slight dip. If you haven't reviewed your rent, last time I was talking to someone at a function, she was renting out her 3-bedroom property in Green Bay, West Auckland, for less than $600.
Wow.
That is severely under rented.
Yeah.
Yeah. So.
And I think it's important to keep that mindset that the rental is a business. You probably have that emotional kind of tie of, you don't want to put people under more financial pressure of increasing their rents, but at the same time, if you're running your investments like a business, then every business reviews their costs and outgoings. Exactly.
Yeah, absolutely. Cool. So that's reviewing rent. What else can we look at to help us?
I think a really important one as well is don't just always go for the lowest interest rate. Just because it's the lowest interest rate, it doesn't necessarily make sense to have that. Look at the full, look at your full lending structure, your longer term plans. You know, yes, the most common sense approach would be take the lowest interest rate because it's going to keep your repayments less.
Yeah.
But look at just diversifying some of those terms as well. You know, you can take your current lending, split that into 2 or 3 different accounts and have them on varying terms, which just offers you a bit of diversification. And if rates do go down, then you get to benefit from them sooner than if you're locked in for sort of 12 or 24 months. But if they don't, then you've got kind of a bit of extra protection. Not all of your lending is rolling off at the same time onto higher or lower rates.
Yeah. Anything else?
I think if you were sensible enough to kind of make overpayments when rates were as low as they were back in the 2-3% days, you're probably feeling the pinch a lot less than those that weren't in a position to do that. You know, if you were making overpayments still when when the interest rates were a lot lower, you've made such big headway in kind of getting your balances down.
Yeah.
And that will soften the blow a bit. Some banks, not all of them, but some banks will allow you to redraw overpaid funds. So if you're in a position now where you need to kind of alleviate your cash flow a bit, talk to your bank and see, can I redraw any of those overpaid funds, or can I extend the term of the mortgage back out? Because that will just help with the mortgage repayments in the short term. I would encourage everyone who has existing lending or anyone that's looking to take additional lending to buy future investments just to talk to an advisor.
Not the bank? Why not?
The bank is never going to approach you and say, do you want to go on interest only? Do you want to restructure your lending? Yeah. They're very reactive. They're not proactive. And a bank can only guide you on their process, their policy, their products. And a lot of the time, the people that work for banks aren't advisors. It's more just transactional. An advisor most advisors will have access to the full market, so all of the banks, non-bank lenders, second tier lenders. We spend all day, every day doing this, so we know the bank policies, what banks are looking for, how to present an application in a good light, how the changes that you make now can affect your your longer plan. Because I guess the important thing at this moment is just kind of surviving those interest rates, making your payments. But as I was saying at the beginning, keep in mind it's not going to be like this forever. If you can ride that wave, then there's definitely things that you can do in the short term to kind of alleviate that pressure.
You know, I broke my 2.55 to go on 4.99 before my 1 year expired.
Okay.
And then now, even the 2-year 4.99 has come off.
Yeah.
I'm paying 7.25 for
Yeah.
6 months.
And if I had $1 for every time someone said to me, "Oh, I wish I'd have locked in for 5 years, 2 years ago, or 3 years ago," and just said, "Yeah, hindsight's a wonderful thing, but you didn't. So now you just have to deal with what we can work with now."
Looking back, it's quite silly. When it was like 2.39 or something, how much lower did we think it was going to drop?
Yeah.
How much lower was it going to drop?
Yeah. And that's it. I think people do tend to forget a little bit that interest rates in New Zealand have always been quite high.
Yeah.
Pre-COVID, we were still in the high 4s, low 5s, low 6s even sometimes. So this, okay, they are higher than we want them to be, and higher than they have been in the past, but they're not kind of extortionately higher.
So the key message for our listener and fans is to talk to
an advisor.
Yes.
And sooner rather than later as well. Don't let it get to a point where you can't manage, or the bank will just stop you from restructuring because you're in arrears or anything like that.
And also talk to a property manager to review your rents.
Yeah.
Thank you.